So a couple recently came to me and said, Andrew, we went to an offshore conference and we were convinced that by getting residence in Panama, spending one day a year there, all of our U.S. tax problems would go away. Hi, I'm Andrew Henderson. I used to run some of these offshore conferences, and we try to do ours a little bit differently, but I ultimately decided I didn't want to be in the conference space because so many folks come and they're looking for that magic bullet. They're looking for that shiny object that will help them solve all of their problems. And what I've learned in all of my years in this space is that there is no panacea. There's no one perfect object. Now, to talk about Panama for a moment, I want to explain the difference between a tax residence, and a U.S. tax solution. So Panama does have a residence program called the Friendly Nations Visa, where U.S. and other developed world citizens can go and get a residence permit. You keep it active by spending one day a year there, and ostensibly it's sold as a way to get a second citizenship in 5 years, even though no one's actually getting their second citizenships. So that's the requirement to keep the residence active on the Panama side. Now, if you're not a U.S. citizen, and you're leaving your home country, Australia, Canada, what have you, it's going to be useful to say, okay, I no longer live in Australia, but now I live here. This is my new abode, and perhaps I have a residence card, perhaps I also have a tax residence card. Panama could be an option for that, and if you want to keep physical presence down, Panama can be just fine. A lot of different questions to be asked there, but that's the gist. Now, in this case, this couple were both U.S. citizens, and they were saying, Andrew, we want to go and live overseas. We want to take advantage of the foreign earned income exclusion. This is where you can take a certain part of your business's profits, pay yourself as a salary. It's a little over $100,000 a year, and that money, if structured properly, can be entirely tax-free. You structure it with everything done properly, first $100,000 tax-free. And so in these people's case, it's a couple, so it's $200,000 tax-free. But what they got confused was, they said, well, you know, there's this thing called the physical presence test, right, where we can spend about a month in the United States. And one of them said, you know, I have kids in the U.S., so I need to spend more than a month. I want the bigger one. I want the bona fide residence test that allows me to spend several months in the United States, because then I can go and spend time with my kids. And she said, we went to the conference, and they said, well, if you have a residence in Panama, and you spend that one day a year in Panama to keep your residence active, you will be a bona fide resident of Panama. And you can then get more time in the United States and still get that tax exclusion. This is classic sleight of hand that is so common in the offshore business. Now, I don't know if Panama uses the term bona fide resident, but sure, if you go and you follow the criteria to become a Panama resident, it's not difficult. You can get a permanent residence card, and just by spending, again, that one day a year there, you will be a resident, whether you are bona fide to them or whatever they call it. That's Panama's business. I don't exactly know their terminology, or if bona fide is even in their lingo. But the issue here for these U.S. citizens is a U.S. tax issue. That's what it always comes down to. This is why the puzzle pieces in your offshore plan always have to fit together. Because if you want to be a bona fide resident of a country for U.S. tax purposes, you don't need to be spending a heck of a lot more than one day there. Bona fide resident means that's your home. And there are a lot of criteria. I don't want to be giving tax advice on this video because that's not what it is. You have to engage someone if you want the proper advice. But on a basic level, you're not a bona fide resident actually living in a country by spending one day there. No person at the IRS is going to look at that and say, oh yeah, this guy really lives in Panama. Let's let him spend 3 or 4 months living in the United States. It's just not going to work. And so it's a classic example of how in this business, people often try and conflate some of the different puzzle pieces to make you think that because you're a resident over here and that makes Panama happy, that it will also make the U.S. happy. The reality is, each different government or institutional entity that you deal with has their own parameters. You need to find a way to make them work together. And just because you're keeping Panama happy with your residents doesn't mean it gives you special tax privileges in the U.S. The same way that just because you're following the tax laws of Nevis doesn't mean that the U.S. won't tax your Nevis company. Everything has to work together. And if you think getting a residence in some country and spending one day there means you can spend lots of time living in the United States tax-free, you're absolutely mistaken.
I'm Andrew Henderson, and if you're looking for a way to legally reduce your taxes, build your freedom, and create wealth faster as a global citizen, then you've come to the right place. I want you to do 3 things right now. Number 1, click the button to subscribe to our channel. Make sure to get notifications so you never miss a new video. Number 2, get a copy of our #1 best-selling book, Nomad Capitalist, on Amazon and learn all the dozens of benefits of our lifestyle. And number 3, if you're already a 6- or 7-figure entrepreneur and you want to put these strategies in place, go to nomadcapitalist.com and find out how to get some help.